10-year Treasury notes falling again today, capping their longest losing streak in 2 years. Trader site reports that the Fed won't purchase as many Treasury bonds as expected when it announces its next step to spark the economy. We're expecting that next week. For more, though, on this and the outlook for the broader bond market, we're joined by the co-manager of one of the biggest and most profitable bond funds. Dan Fuss is the co-chairman of Loomis Sayles. Dan, good to have you back with us.
Well, thank you. Good to be here.
So what do you think the Fed's going to do? Is it not going to be that shock and awe that many maybe were anticipating? And is that a bad thing?
Well, number one, they don't ask me for my opinion.
But you have to make investment decisions based on what you think.
No, shock and awe, no. Steady support for the Treasury market, yes. I think there's an informal accord between the Treasury and the Federal Reserve. The Fed supports the Treasury market. Treasury's raising a lot of money. The Fed supports it. We did it before on a formal basis when I was a kid. Now we're doing it on an informal and perhaps more effective basis.
Do we need any more in your view, or shouldn't we be happy that maybe the Fed can take their foot off the gas pedal here?
Oh, boy, this leads to arguments with a lot of people, Carol.
We've had
none of us know. My own view is that the Fed wants to keep the cost of the Treasury borrowing requirement, which is growing like mad, at a very reasonable level. They're supporting the Treasury market. There are economic arguments for and against. The long-term argument is very pessimistic. The near-term market is very positive. The near-term view is positive.
You've been shunning U.S. Treasuries. You still are.
Right. Not because, it's the best country in the world for most respects, but we're just issuing a ton of Treasuries, and they're relatively overpriced relative to other things. So we've gone elsewhere.
If the Fed, though, stops in terms of their quantitative easing, could that possibly start to make Treasuries more attractive or not a chance?
Oh, yeah.
It would?
Yeah. How do bonds become more attractive? They go down in price.
Okay. So you could see you changing your tune at that point.
Yes, I'd be surprised, however, if that happens.
You know, Bill Gross is out with a comment. He says a renewal of asset purchases by the Fed will likely signify the end of the 30-year bull market in bonds. What do you think about that? I know you and I were talking in the break. You're like, Bill's a smart man. But
he is. I happen to agree with him. That ought to worry him. But I do agree with him. This is in process. The end of the bull market in bonds has been going on for a while. We're in price terms, we're in the bottoming period. I personally think that because our central bank and others are buying U.S. Treasury bonds, it could go on for a while. But look at it this way, Carol. Good news.
Right.
Reinvestment returns are going to go up. In other words, bond prices go down. But you can manage to that as long as you manage in advance.
What about European debt? Talk to me about that. There's some renewed words about some of the numbers we were seeing overnight in terms of sovereign debt. You like some. Which some do you like?
Well, the one that's gotten all the publicity is Ireland. Yeah. We've and that's been over 90% of what we've done, because Irish Treasury bonds got very cheap around the time a few weeks ago of their 8-year offering. And in size, that more or less set the bottom. Secondary market has been cheap in through that. I think it's getting cheaper again today. But the euro relative to the dollar is up a lot, so we're still not there.
Got less than a minute, Dan. I want to ask you about the corporate bond market. Any sectors, rating categories, maturities that you like at this point?
Nothing stands out. Corporates are very attractive relative to Treasuries.
Right.
And that's pretty much without exception. There aren't major distortions.
What about casino company bonds? And I bring that up. They're the best performing junk bonds this month. Do you find them attractive at all, Dan, or what?
Well, you have to know what you're doing on the specific credits, because that's sort of the epitome. By the way, the stocks are among the best performing stock sectors. But you really have to know what you're doing. They're positively leveraged to the economy big time. So the economy here and China.
All right, so it sounds like be careful, though. Or picky.
No, you've got to do your homework. Put it that way.
All right, gonna leave there. Hey, Dan, thank you so much.
You're welcome,
Good to have you stop by. Dan Fuss is the co-chairman of Loomis Sayles.